Okay. I come back to the Aussie dollar profile. This is on just on MT4, and if you haven't been to these sessions before, just very quickly, I'll explain how I have set it up. Obviously, with MT4, you are restricted to the time frames that they give you, but I used to think that it was restricting, but actually, it's in some ways especially when you're starting, you don't have a lot of choice. It's probably better because one of the dangers that new traders face, or more inexperienced traders, is when you have this it's very wide selection of time frame, and you see a trading opportunity, you get into a trading opportunity, and perhaps it's not going your way. You then sort of frantically go from time frame to time frame, going up, upstream, downstream. Oh goodness, what am I seeing there? What am I seeing there? And it can, in the end, you'll just sort of confuse yourself. So with MT4, as I said, it is what it is, but it's really, I think, a really nice way to, to start, get comfortable. And then if you want to add other time frames, fine, go to 25 or go to another platform. Now, the way I've set it up is I have the CSI here, I have the matrix above it. I've only got the two currencies in question, obviously the Aussie and the dollar, but you can add on, add others, take them off as you wish. So if you just want to see how the others are doing, while you are analyzing this particular pair. But it just cleans the CSI. You're focused on this pair, and you can just quickly just go through the time frames and see, well, okay, what does the hourly say? My hour, it tends to be on the faster time frame. It's a kind of the benchmark, and it's also because the way we mark important support and resistance areas, we do price-based and we have some volume-based. The price-based ones are from the support and resistance indicator, but also from the Camarilla level. And the Camarilla levels, the way they work is on the time frames below the hour, not including the hour, they're refreshed every 24 hours. Every time, once roll over, you get new levels. But on the hourly and the daily charts, they are there for the rest of the week. So they give you on the slower time frames, they kind of take on a greater significance. So, for example, if you're on the faster time frames, as we see here, and we're coming up to the third level, this is the third pivot camera. That's actually quite an important pivot, the third and the fourth levels. And we see here, now, what am I expecting here? Well, I'm expecting at the very least a pause and a test of this level. Sometimes it will test it 2 or 3 times. The more times it tests it and it fails, then the likelihood is we are going to get a reversal. So I've got the 5 minute, I've got the 15, I've got the hour, and I've got the daily chart. And I've also got a Renko chart, which is obviously not time-based. This is set at 3 pips, because with the Renko chart, what it does, it takes all the noise away. You don't obviously have wicks, and what you're looking at is a geometric representation of the price action. And we can see here, as I said, with the levels at the moment, what we're seeing here, so the test of this third level, it tested it, I said before, tested it almost there. That's the support and resistance line. Didn't get through, came up to the third, didn't get through, and it actually carried on lower. And we're back to testing this third level again. As I said, an important level, but more importantly, when we reach this level, it tells us, expect a pause. So this reversal that we see here on the 5-minute chart is a really nice little reversal. It's a reversal based on, I said, the candle pattern that we have here. If we put these 2 candles together, what we have is the equivalent of a hammer candle. And, that of itself, just on its own, would tell us that, such a strong pattern, the chances are it is going to go higher. And it has. It actually got through the volume point of control, This is volume-based support and resistance. This is the volume, but this is the point on the chart, which is, if you like, we've had the price will consolidate, has been consolidated, consolidating, has been a pause. This is what I mean about when price reaches these important levels. It stops, it tests it, comes back down, and then moves on again. That's how price action works. Nothing goes up in a straight line. Now, the third level, it's actually gone straight through. We look at the volume underneath it is very nice. That's what we want to see. So, it looks like it's going to go higher. If it pauses, it will come back and test it again. When it's on its way up, it comes back and tests it, pulls away, comes back and tests it again. In a way, that's what we want to see, because then that gives us that little bit more confidence in thinking, yeah, it's tested it, didn't go through. It's providing a nice base, if you like, for the move higher. If we look at the 15-minute chart, where we saw that reversal, the fact that the volatility trigger indicator was triggered on this candle, that of itself is a warning sign saying, right, because we've got this volatility came in. It also came at this volume support. What the VPOC does is, at this point here, it produces these bands. So this is the top band, this is the lower, this is the final band. They also act as support and resistance for the price action. So as I said, as a little reversal, it's very, very nice. You've had support levels coming in, you've got volume coming in. Because you've got volatility trigger, that's almost guaranteed to go back into the spread of that candle. You put that candle over there, you get a hammer, you've got a nice lot of volume. We're in a liquid part of the trading session, so you can be as confident as you can ever be when you are going to take a trade. Looking at it in terms of what we see on the on the Renko, the way the Renko works is the way we use it, and the way we suggest those of you who have the quantum tools use it, is you use the little dots. They will all change. They will always change first because they are closest to the price action, and then the trend monitor will kick in, and you will get this, this bright blue. As you can see here, the trend dot changed first. Once it got through the S4. Now, whether you use the Renko for your entry purely as a Renko, then my suggestion is you really have to wait for what you're seeing at the moment. You're seeing this probably here, this bright blue coming in. You did have a little dip here. But you need to use it in conjunction with, I think, with what you're seeing on the time chart, either the 5 minute. 5 minutes is probably a nice chart to use. Going back here, you say, well, why? We saw that here. We saw this move higher. This actually kicked in, and it didn't go anywhere. Well, what you have to look at is what was going on before then, and what you're looking at. This is actually a congestion, and if you look at the price chart, you will see that this happened while this is quite a deep congestion, whereas this bit of price action here, when we look at the chart, we can actually see that there was a potential reversal setting up anyway. So it's the context of the Renko vis-a-vis what you're seeing on the time chart. So with the Renko, you can use it for entries. You certainly use it for exits, although personally I think for an exit, not so much for an entry, I think probably looking at a time chart is probably better. And the reason I say that is because then you can look at the slower time frames, because what the slower time frames may tell you is, are you coming up to one of these important key levels? But it also can give you a sense of projection of where this price action, where is it going, where is it heading, where would it like to head? And on the hourly chart, when we come here, we've actually got a 2-bar reversal on the hour anyway. The most logical point is the S3, so that has the potential to go higher. And if we go over to the CSI, I've got the CSI, I've got on the hour. Let's move it right down. Let's go down to say sorry, changing the, there we are. Let's go here. We'll go down to the 15. We've actually had a cross on the 15. That's a really nice sort of signal to see on the CSI. Those are the points of your reversal. When they cross the lines, then the trend is already underway, which we have seen here because we've had it confirmed with the reversal candles both on the 5. We've had it confirmed with the reversal candles on the 6. We've actually got reversal on the hour as well. So people say, well, I've missed all that, you know, I'm really cross about that. Well, there's no point in getting cross about it because this is trading. You're always going to miss trading opportunities. You're not necessarily going to get in at a reversal. And also that this reversal would have appeared first on the 5, then on the 15, on the hour. And we're often asked, well, do I get in here? Do I get in here? Or do I get in, you know, do I wait? Well, that is a personal decision. You know, where do you feel more comfortable? Some traders, you know, how many confirmations, signals do you like to see before you take a position? That is a matter of personal decision. That it all goes back down to your trading, what we call trading persona. What kind of, you know, what is your tolerance to risk? Are you a more aggressive trader? Are you perhaps a little bit more conservative? There is no right or wrong way in being a trader. It is who you are. If you're on the program, I hope you would have done the psychology module, so you know your strengths, you know your weaknesses. And I don't mean weaknesses in a pejorative sense. I just mean, you know, the things that perhaps make you feel a little bit uncomfortable. I mean, just to give you an example, I'm a terrible perfectionist, you know, and I sometimes have to, you know, I like to, in my life, everything has to be absolutely perfect, but sometimes it can be a blessing and a curse. It's a blessing when everything comes together and it looks fantastic in whatever I'm doing, but at other times it can actually paralyze you and think, because nothing's quite right. And you know, David, on the other hand, I'm not saying he's not a perfectionist, he is a perfectionist, but his comes out in a different way. When it comes to trading, he'll say, yeah, that's it, and away he goes. So as I said, it's not necessarily a weakness, it's just understanding what your personality is, and you know, what is it that is, you know, that you need to see to give you the confidence to move forward. So having a look at the CSI and seeing that we now have a cross, you should take that as a positive. It doesn't mean, you know, it's not necessarily going to, you know, that may only get to there, that may only get to there, but it's a confirmation that, you know, this is moving forward. What's also a confirmation, going back to using support and resistance, is it has gone through the S3, it hasn't come back and tested. You know, the volume is holding up. So it's not whizzing about, it's quite steady, it's not, you know, there's nothing to scare us, as it were. So that's what's going on at the moment. Now, finally, when we go back to the daily chart, what we're on this, this is the wick to this candle. Now, what's interesting about the daily chart for the Aussie dollar is it actually in a sort of, it's in a sideways, but it's in a sideways within some really important levels. We've got the volume point of control. It hasn't been able to get through that. In fact, it's this candle here until this little reversal is actually one of 3 candles where it's going low, and it actually bounced off the S4 of the levels in the Camarilla protocol that we've developed. There are 6 levels. The 3rd and the 4th are they are the most important, as I said, they are the most significant, and it's where price will pause, sometimes reverse, and certainly in this case it is bounced off the S4. And the other thing we have to now keep an eye on is, well, it's here in the UK it's 20 to 1, so we've got the North American forex session coming on board soon. And remember what I said, you have these crossover periods, there's always, you know, the potential for additional volatility. You know, just you've got a whole set of fresh eyes, new traders, anything can happen. And if we, and I'm going to work backwards, and we have a really good example of this morning. This is not in real time. You've got to take 2 hours off the timestamp on the MT4 platform. This was actually a nice move lower. We were, well, it was actually the end of, coming towards the end of the Asian session. Nothing happened in the Asian session for the Aussie dollar, and this move lower started. We can see the trend monitor went into bright red, but see what happens. This was 9:45, so that's 7:45. That's just before London. This often happens. You know, people see this candle coming in, and it's a really nice candle. It's got a deep wick to the bottom of the candle. It's a classic hammer candle, and you think, oh, great. You know, this trend has been coming lower. Now's the time to go. You know, potentially go higher. What happens? Well, first of all, we've got the volume point of control. So that in itself would tell us that if you are going to get a reversal, because we're in a congestion, the chances are something's going to, you know, maybe, you know, put a stop to the move. And in fact, it does. And it also hits the S3. Then London comes over, comes on board. We don't get a lot of volatility, but it doesn't go anywhere either. And then what happens is the original trend low, which is the primary trend low, where we thought this was a reversal, but because of where it happened in the time of the, you know, what time in the trading session, in fact, the primary trend carried on a little bit low. But you can see here it was constantly trying to, you know, trying to rally. As I said, this was the initial rally point. London Open, you know, put the lid on that. Okay, then it came that we had more consolidation until we had the final, you know, push lower, and you know, these really strong candles down to this the volume level here. So on the 5-minute chart, obviously it's, you know, you've got lots of candles, and those 3 candles there, by using multiple time frames, you think, well, if I'm on the 5-minute chart, why didn't that continue lower? Because you've got 3 nice candles, you've got, you know, nice volume underneath it. Well, and this is why you have to use multiple time frames. As soon as that was triggered, those 3 candles that we saw there, we say, right, that would tell us that's actually coming to a potential, well, certainly a stop, if not a reversal. And this is the reversal that we are seeing. But if you had stuck to just the 5-minute chart, you know, you would not, in all conscience, have said, oh, great, that the primary trend low is going to carry on lower. But by using multiple time frames, certainly on the daily, you would have seen that you would have hit this level here. So it sounds as though it's a lot of things to take on board, and it is when you first start, but it's seeing these time frames in this kind of holistic way. They all give you a little bit of information, a little bit of, it's a bit like, you know, when, you know, you've seen those pictures of air pilots in the cockpit. They've all got different instruments. Each instrument gives them a little bit of information, and they put it all together, and that's how they fly the plane. It's not just one instrument. They don't focus on, you know, one clock or one dial to fly that aeroplane. They have to look, because everything gives them a slightly different bit of the overall picture, and that's what multiple time frames do for you. And if we go back to the hourly chart, so those of you say, well, I don't want to be on the 5-minute, I don't want to be on the 15, you know, I haven't got time. And if we look at what has happened with the Aussie dollar since, in fact, since yesterday, since the 28th, and again, it didn't really do very. If we go back here to the beginning of the week, what have we got? Well, we've got a congestion. We can see that constantly trying to break higher, then, you know, break higher, and, you know, back to the volume point, which is why a lot of traders do not like congestion phases, because you do get these constant fake breakouts. My answer to that is the one advantage of breakaway trading from a congestion is you can place your stops really, really close. And you can see here, if you're thinking, okay, well, I think this is going to break higher, I think this is going to break higher, where would your stop be? It's very, very close to the volume point of control if you think it's going to the. So yeah, you are going to get a lot of little losses, but when it does take off, it can deliver a nice trend. It does finally break higher, and what happens when it breaks higher? It breaks higher on a volatility candle with a wick to the top. So immediately, and it hits a level, it's an R2, it's a second pivot, and it's got volume resistance as well. What happens is it goes straight into the spread of the candle, moves sideways. Now, in the spread of this candle, don't forget this is the hourly chart, there were probably there are trading opportunities on the faster time frame, but you're not looking at the faster time frame, you're looking at the hourly chart. So the volatility would tell you this isn't going to go any further, and you've got a wick to the top of the candle, and it's actually, where does it go to? It goes straight back to the volume point of control. You think, okay, it's trying to break away. What happens at the VPOC? Again, we have we have 1, 2, 3, we have 4. It has to take 4 goes before it breaks lower. But if you were going to go short there, where would you place your stop? You'd place it sort of up here somewhere. It's a very, very tight stop for an hourly chart. And this is as I said, this is actually the trend, part of the trend lower that we saw going into the London Open this morning. Again, we get to the S3, what are we going to expect? Well, it tells us what we expect, this more sideways, then we get another break. So what I'm trying to say is, if you are going to do breaks at levels, obviously you've got the VPOC, but the VPOC, it does build up transacted volume. It can, those consolidation phases at the VPOC can be, can last a long time, whereas on the Camarilla levels, they don't last as long. They never last as long. So possibly use them as, to try, see what you think about, well, what are you seeing on in terms of testing, pulling away, and then, and of course look at the volume. So that candle comes in there, it's there, that builds up, and we actually get a 2-bar reversal here as well on the hourly chart. And also on the up candles, see what the volume is. If you've got a very widespread candle and there's not a lot of volume, you've got a wick, you still have to talk the candle patterns in your head. You're looking at candles, you think, okay, there's a bit of weakness coming in here. Is it where's it, why is there weakness? Is it, is it being supported by volume, or is it because it's hit an important support or resistance? And in fact, we're back. It did pull away from there, and it's back and it's testing again. Now, we just have to wait and see whether that's actually just a test and it's going to carry on higher. This has stayed blue, and this is where the Renko comes in. I think this is probably where the Renko really comes into its own, in the sense that you've got all that going on the time charts, and it's, as I said, it's gone through much more so when it tested it the last time, but it didn't hold. This time it has actually closed above this level, but it's just, we have to wait and see. This is still blue, the trend dots are still blue. It's where they are when they're at the top of the candle. It's obviously more bearish than if they're there. Sometimes you can have a red candle with the blue dot at the bottom. That gives you more confidence. But we know the third level, the third pivot, is important, and one that we have to pay attention to when the price action approaches it. Where are we on the hour? I said projection wise, that's certainly the logical point, but we have to bear in mind it's now nearly 10 to 1. So New York forex is coming on board. price action is going to, sometimes the price action will do one of two things. Well, this has got the dollar in it, so obviously it's always, you know, going to attract more attention. Some of the cross pairs, you'll find they simply sort of die down, and then, you know, wait until the session gets underway in North America, and certainly with Wall Street. Again, that's another point that you will get extra activity, as it were, not necessarily volatility, additional activity. And I think that is potentially what we are seeing at the moment. Doesn't mean we won't continue to get a reversal, but as I said, bear in mind what I said at the beginning of this session. We are towards the end of the month. There tends to be dollar buying for all sorts of reasons, rebalancing, you know, etc., etc. Now, what's interesting on the CSI, you've actually still got the Aussie. There is still Aussie buying, and if we look at our matrix, the Aussie dollar, there's Aussie buying certainly against the yen. This is one of the yen pairs that David was seeing. There's quite a nice strong line of Aussie. The dollar is kind of going, is flattening out. If that turns up, the dollar, that line is parallel with the Aussie. Well, that tells us then we are going to be in for a period of congestion. So as I said, the forex market is marketed as you can trade anytime, anywhere, any place, like that very old Martini advert. Now you'll know, showing my age. But in reality, it is three very separate sessions, and in a way, it goes back to this idea of choice. So if you know, there are periods when it's almost saying, okay, I know when there's going to be an influx of activity. I know when it's going to be quiet, and you can sort of say, right, well, I'm going to ignore those periods, and I'm only just going to focus on when I know there's going to be more activity. But the downside, the corollary to that is to be aware is when you get additional activity, you get a new center coming in, you are going to get a completely different set of opinions. You've got more traders, so you have to sort of balance the two together. And it'd be interesting to see, in fact, what happens with Aussie dollar. And as I said, it's actually come back to the volume point of control on the 5-minute chart. But I just thought it was just a really nice example of multiple time frames, support and resistance, using your entries, using levels for projections, using you know, putting it in the context of what is going on in the market, the fundamental news, the risk factors that we have today. I know it sounds like a lot, but it's a bit like flying an aeroplane. You know, you eventually, all these dials and you know, indicators that you have out there, you just simply, it's just practice. You just have to sit there and, you know, start with I'm going to look at this, and I'm going to look at, you know, what are my candle patterns, and also develop a favorite candle pattern. Do you like 2-bar reversals? Do you like hammers and shooting stars? There's nothing wrong with that, and gradually, you know, you build up from there. And one of my favorite pairs, cross pairs, is actually the pound Aussie, which I haven't got time to have a look at the moment. And looking at the values on the matrix gives you so much information about the pairs. We can see this very, you know, this nice steep line for the Aussies. There's clearly some nice buying of the Aussie. And we look at the values and we see the Aussie yen, that's plus 28. But if we look at the pound yen, it's minus 39. And that tells us, if I bring the pound up, yeah, because you see about a cross, probably went sideways for a bit, and now we have a really nice, we've got strong divergence from that cross. So if I were, what I sometimes do of the two pairs, if I have, if I say, for example, I have a pound sterling, so I would have this combination. So I would have maybe a cable up and pound Aussie. So I would actually, yeah, I'd leave it like this. So I'd have the dollar, the Aussie, and the pound. That also tells me what cable is up to as well. And if I just quickly go down to pound Aussie, because I haven't had a look at it, let's have a look, see what's that doing. And we can see whether the, and we look at, and this is, what do we have here? We have, this is what I mean. This is reflecting that very strong move that has come in to the pound Aussie. It's certainly been pound Aussie buying. The dollar, as I said, really being affected by what, because we're coming up to the North American session, something that we need to be aware of. And again, volatility, we've actually got a volatility candle to the downside. We did get a retrace, there's a big spike there, but it actually is follow through. Projection wise, we look at the levels that are coming up, but there's quite a lot of momentum in this move. And this is what we want to see with the Renko. Once you get on the end of a move like that, it's fantastic. It will just keep going, basically, but be aware you will probably get volatility triggers as well. Right, I'm going to pass back to David. Thank you for listening to me, and we are back later. Is it this evening, David? Yeah, lovely. Thank you, Neville. 7:30. Yes, 7:30. It's quite a nice time for us because it's almost the close of the US session. I'm going to pass it over to you, John. Is that all right? Brilliant.
Hi again, everyone. Oh, excuse me. Hopefully you can hear me and see my screen. I've actually moved over to the yen matrix, not the yen matrix or the matrix indicator, rather a workspace which has basically got 6 of the 7 yen pairs. So I've got Aussie yen, CAD yen, pound yen across the top, and down the bottom I've got Euro, New Zealand, and Swiss yen over on the right-hand side. Because this is another, I just wanted to show you another facet, and I also want to pull over Tradingview in a minute as well. But this gives you, I talked about when you're in a trade, you want to see everything going in the same direction because you want to be trading with the universal flow of the market. So if you're in a position, doesn't matter what it is, if you're buying and selling a particular currency, ideally you want to see the rest of the market buying or selling that particular currency, because then you are trading with the flow, the universal flow of the river. It's a lower risk proposition because if you are paddling against the universal flow, and on occasion it will be that way for many different reasons. It could be a political event, it could be some local event. When I say local, I'm talking about, national local, but it could be something that is particular to that particular currency and that particular country. That's fine, and it will be against the dominant which is going on elsewhere, as long as you understand that. But typically what you're looking for is you are looking for those opportunities where everything is going in the same direction. Now, what's interesting about this matrix at the moment, and in particular with regards to the Swiss yen, these are all on the same time frame, so this is 5 minute. I said at the time that it was time to close out. Let's take our money, head for the hills. If you're trading multiple lots, you might leave one on, you might take off most of it. If you've got 5 positions, you might take off 4 and leave 1 to run. That's entirely your choice. But I was saying at the time that it's for lots of different reasons. It looks as though it's coming to a pause point. So let's bank what we've got and head for the hills. We've had this congestion phase. It's been going on all the time Anna was speaking. This is 12 o'clock our time. It's now nearly coming up to 1 o'clock, opening the US markets. You can see what's happening, and we're starting to see that drop off there. Do you really want to sit through all that and the pain and tedium of that? Not really. But the other point about it is this. Whilst we were seeing equivalent strength in the Aussie yen move, the other pairs were less so, and particularly you're looking at things like Euro yen, where you're starting to see that sell-off, that weakness coming in. Here we are at 12 o'clock again, and you're starting to see weakness coming in. New Zealand's gone into congestion, but up on the pound, look at the pound yen, horrible, absolutely horrible trade, and it's in congestion, untradeable at the moment, just nasty. But it's indicative of the fact that, particularly with the euro, that these markets are not all moving with the same enthusiasm, if you like, towards buying or selling of the yen. And that's really what you're looking for the whole time. You're looking for that consistency across the piece. And if I pull over Tradingview again, it'll move. Come here, that was gone small for me. Oh, white, there we go. If you look at it in terms of the CSIs, for example, on Tradingview, MT4, NinjaTrade, doesn't matter, all work the same way. What you're seeing there is that effect, because when you look at the 15-minute CSI, for example, the strongest trade is going to be the Swiss franc because it's been rising strongly and the counter currency, the yen, has been falling equally strongly. So that is going to be your strongest trade, purely on the basis of that, because you've got strong divergence in terms of great strength in one and great weakness in the other. And when those two combine like that, it's like, I don't know, the legs of a pair of tweezers. As they separate, you know, that is going to be strength. The ones that are less strong, certainly you can see here the pound was falling, it's falling with the yen, so there's going to be no trade. You don't even need to look at a chart. In fact, when you're looking at the CSI, you really don't need to look at the chart at all to figure out where are the opportunities and where are the ones I can safely ignore. If the two currencies are moving together, you can ignore it, because unless there's a very, very strong move in one of the currencies enough to create a trend, that trend at best is going to be weak and probably non-existent, in other words, in congestion. So that's why the pound and the yen were so weak, equally with the euro, pretty weak with the yen because it's falling in the same direction, it's moving in the same direction. The CAD, on the other hand, is moving counter, so you have a decent trend there, but only at the point where it actually started to reverse. In this phase of price action here, right the way down to this point here at about, where were we, 10:30 odd, you would have been in congestion. Then it starts to reverse, then you start to get the trend develop. Yen continues lower, CAD continues higher. And the Aussie yen here, similar sort of thing, up to about 10:30-ish. The yen was falling, as was the Aussie, but then it gets to oversold and it starts to kick higher, and now it's starting to trend nicely. So against the yen, fine, happy days. In terms of the Aussie yen, the one issue I would suggest with the Aussie yen is it's slightly imbalanced now, and by that I mean ideally, and this is ideal, if I was to draw this, ideally what I'm looking for is I'm looking for a currency to move at this rate down here and at this rate up here, and to kind of cross in the middle somewhere, so that you know you've got an equal amount of travel, if you will, left in the journey, if I can put it in those terms. In other words, when these two cross down here, this is heavily skewed to the downside. So whilst this is continuing higher, the strength, or rather the weakness in the yen, is starting to slacken off. It's not as strong as it was, and it's starting to belly out. And that's an issue. If you're jumping into a trade on Aussie yen, you're looking at it, ideally you would want this point to be up here somewhere. You really don't want it down here, because this is starting to weaken and is likely to weaken, whereas this has got a huge amount of distance to travel. So it's just looking at it in those context terms as well, of where those crossover points are and whether you're looking at equilibrium as best we can. Ideally what you're looking for, and is what I'm always looking for, as you will know, is I'm looking for strongly overbought up at the top, counterbalanced with strongly oversold at the bottom. Now, there's no guarantee that this will move higher at one rate and this will move lower at exactly the same rate, so we have, you know, perfect symmetry. It doesn't happen like that. But that's what you're trying to achieve all the time. And when you see a trade like this come up and it's really out of balance, I mean, if it was up here, fine, but it's so low down the bottom, that's not to say there isn't a trade, but you've got to have that in the back of your mind as well. So I just wanted to highlight that because it's just a nice example of it all. This is the radar panel on Tradingview, which is really helpful. It gives you all the information. We developed this back end of last year. As many of you know, we're working flat out on NinjaTrader at the moment. And we will get a lot of those indicators ported over. If you're on NinjaTrader and you've got the full package, happy days, because you get all the indicators free of charge. And that applies to every platform. So whatever we develop, if we develop for Tradingview more indicators, which we will, because ultimately whatever we develop on one platform, we then port across as we keep working to keep running to catch up, to move them across onto the other platforms. So you get all the indicators we develop for any platform ported across onto another platform, you get them free of charge. So this is the radar panel, really, really helpful. I've got it up here on some of the obviously the Aussie pairs. This is what I wanted to show you. This is absolutely key however you're working, you need to have these 4 indices up. These are the currency indices themselves. Top left is the pound. That's what we've been seeing selling. We've been seeing the pound selling off quite strongly pretty much all morning. Over on the right-hand side, this is the yen. So this is your yen index. This is telling you what is going on in terms of the yen. And the reason that you're seeing congestion on the yen pairs at the moment is because the yen index itself is in congestion here. Now, if this starts kicking up in any meaningful way, in other words, risk sentiment is changing. If risk sentiment changes to risk off, then you'll start to see this rise strongly. Depending on what equities are doing, they are trying to cling on to some positivity. It was a very negative day yesterday, widespread down candles, great trading yesterday on the indices, on the YM, the ES, and the NQ. Today, it's flatlining at the moment. A lot will depend on what happens in the next half an hour in terms of news releases. But if the yen is going to reverse, then you'll start to see it pick up here. So you need to have these 4 index charts up all the time, along with the VIX, another key one. This is the dollar index. This is what's going on in terms of the dollar, flip-flopping sideways at the moment. And finally, over to the euro, seeing some decent euro buying. We're now starting to see euro selling coming in. So whichever platform you're on, please have these 4 up. I just want to highlight something else on here, which I often do, which is this. This is the currency heat map. The currency heat map on Tradingview is unique, and it's unique in the sense that you can have different time frames. We cannot do this on other platforms. It's because the Pine script allows us to build in this flexibility, and I'd love to have this on Ninja and TradeStation and MT4, but we can't. It's just something that happened. It was a pleasant accident, if you will, that we discovered it. And what it means is that you can have, as I've got here, I've got a currency heat map here with 1, 5, 15, 30 in an hour. So if you're intraday trading, scalping, it's great because you can have those sorts of time frames. And over here, I've got much slower time frames. I've got an hour, 4 hour, 1 day, and 1 week. So it's just a really, really powerful way of using the heat map. You can have as many of these as you like. You can have 2 or 3, doesn't matter. And you get this dual vision aspect of what's going on. You've obviously got the matrix in here of all the pairs, whether they're bullish or bearish in terms of the time frames themselves, in terms of the cells and these values which tie back to the currency matrix values. But in addition to that, you also get on the ranking ladder here, these are weighted. So the Swiss yen here at the top, the heaviest weighting for that will be the hourly. The least weighting will be the 1 minute, and that's what you would expect because weighting, the slower the time frame, then the greater the weighting. The faster time frame, the slower the weighting, and that's how it works. So the pairs on this ranking ladder will move much more slowly. They certainly won't move at the same speed you'll see them moving at on the matrix. They will probably, on this sort of setup, would move more akin to the currency array, because remember, with the currency array, it has a much longer look back period. The currency matrix only looks back over 7 or 8 bars. The array is looking back over 70 or 80. It's a much slower context of time, and it would be more akin to this. So these won't jump up and down here as they do on the matrix, but they will move up and down here as that sentiment changes towards the weighting across these particular cells. So I just wanted to show you that. I can't remember what was on the last one. I've just got the pound dollar up there. One other thing very quickly, I just want to show you something else which is quite interesting. Where are we? One of these, got it on, I think. Oh, here we are, trading panel. There we go, sorry, I had it there already. If you click on the trading panel, it will actually show you the brokers that are now available through Tradingview. And this has increased. It's not increasing dramatically, but there are new ones coming through. And what's interesting is interactive brokers has now been added to that particular list. And we have accounts with, I think, 3 or 4 of these: TradeStation, Interactive, FXCM, forex.com. It means that you can trade through Tradingview. All you need to do is, if you have an account with any of these brokers, then it's a fairly straightforward process to get it linked, and that means you can trade automatically directly off the Tradingview charts. You've seen me do it on with the FXCM one. where is it, over here, which we've done it. I have to be honest, I haven't set the other accounts up with Tradingview, but I could do, and I could have all of them here and just trade through them, which would be, you know, nice and easy. By the way, on the FXCM, I think we're over $2,000 now, something like that. So it's ticking along very nicely. Very low risk trades, micro lots only, very, very small numbers, basket trading primarily, very simple stuff. It's not sophisticated, it's very simple and much longer term. So I just wanted to highlight that if you're looking at brokerage, then, you know, these are the ones that are available at the moment, but they do add new ones from time to time. But it's not a bad selection, you know. For forex, you can go to OAN or forex or FXCM, and just link it through. Other than that, you just use your Tradingview indicators as Tradingview analysis, and you then have a separate brokerage account. So let's just pop that out the way. There we are. Very quickly, just to wrap up, because we've run way out of time. Apologies, just pull that up. I'm sure many of you know we're working on the complete stock trading program at the moment. It's going to be a huge program. It will run alongside the forex program. There's a huge amount of content. It's taking us, as always, a lot longer than we anticipated. That's because we like to put everything in that you need to know, either as a stock trader or as a stock investor. So it will be massive, comprehensive, as always. You can register for the details here. Just click on the button there, and that'll take you off to the sign up page. So you'll get the details in due course once that's launched. We're hoping to launch it towards the end of this year. Fingers crossed if we can. We are working on a whole bunch of new indicators. Initially on NinjaTrader, they are very much based around volume. So we're working on something called the VWAP, which is volume weighted average, and combinations thereof. That will be one. There are several other indicators as well as sentiment indicators that we're working on too as well. And I'm sure many of you are familiar with the Forex program, the complete Forex trading program, and also the funded, which now runs alongside. You can join the funded program at any time. You're trading our money, not your money. It starts off with an evaluation level of 5, 10 or 15,000. There's a one-off fee to join, and after that, that's it. You just work your way up through the levels, and you can go up to $2 million. You start with 5, 10 or 15, we then double that. And you work your way on up to, as I say, to $2 million trading our money, not yours. This is where you find Anna, all the analysis. You can find all the books up there on Amazon, either in Kindle or in paperback, and all the links to all the various sites there too. And finally, over to quantum trading itself. This is where you find all the indicators, all the packages there for the various platforms we have at the moment. And always remember that if you invest in a full package, whether you're on the education program or you buy the full package outright, you will always receive all future indicators we develop free of charge. We've always done that since day one, and it's been hugely successful. And we're just very proud of the fact that customers actually love that facet of what we do. The fact that we give those indicators away free, and it includes obviously 24/7 support and all future upgrades. You don't pay for anything. Once you've bought an indicator, whether it's one or a bundle, you will get all future upgrades free of charge and 24/7 support. And it is 24/7 support. It's 365 days of the year. And for those of you who email at the weekends, you'll get a reply at the weekends just the same as every other day. And also, finally, just remember, if you have bought an indicator or anything from us in the past, whether it was 10 years ago or 5 years ago, we'll have you on the system. We will always credit you if you want to upgrade. So if you want to move up to a package, or if you want to move across to the education program, you'll always get a full credit for that. So thanks very much indeed for coming along today. Hope you've enjoyed it. We'll be back at 7:30 our time, which is probably 2:30 Eastern, I think, roughly. So thanks for coming today. Hope you've enjoyed it. We will see you again soon, and enjoy the rest of the trading session. Bye for now.